Good morning. Sí, y dile a Axel que se venga, por favor. Estamos. Hello. Hello. Good morning, everyone. We want to start this morning with what we think is a very interesting panel. For many of you might be sort of a new thing or a bit of a surprise that we are doing a panel on the challenges that our regulator has in carrying out a new role that was instated when the CMF, when the SVS and the regulator of the securities market and the regulator of the banks came together a couple of years ago. So we have the pleasure of having Solange Berstein with us today. Solange is the head of the Financial Market Commission, and she has a wealth of experience in financial sector matters. Before becoming the president of the CMF, she worked at the Central Bank of Chile, and before that she was the head regulator of the pension management companies or the pension system in Chile, actually. She holds a PhD, a master's in economics from Ilades Georgetown University and a degree in commercial engineering from Santiago University. So thank you very much, Solange, for joining our panel. We also have the pleasure to have Axel Christensen with us, Managing Director, Chief Investment Strategist, Latin America and Iberia at BlackRock. Also someone that has a wealth of experience in financial markets. We also have Carlos Saieh. Carlos is a partner and CEO and head of infrastructure at Toesca Asset Management. Fairly, I would say, new, but very interesting player in the financial markets in Chile. So, Solange, please. We will start with some remarks by the chair of the CMF, and then the panel will comment Solange's remarks.
Thank you. I will just keep seated here. Do you hear me? Yes. Okay, great. Thank you. Okay, so good morning, everyone. I'm happy to be here sharing with you. Our role as CMF indeed has changed since 2019 when we merged the Securities and Insurance Supervisor with the Banking Supervisor in Chile, and it has been a great challenge just to integrate both institutions and at the same time to restructure in order to comply with our mandates. And we do have 3 mandates. I don't have a clicker, but if you can go forward with the presentation. I don't know who's managing it. Okay, good. So indeed, we do have these 3 mandates. So we are a special supervisor in terms of how comprehensive is our perimeter somehow. It's quite unusual because most of the countries do have specialized supervisors in terms of the sector or in terms of the mandate, but we have all together. So we do have all different financial types of institutions. And as we mentioned yesterday, we are adding now the fintech industry as well. So we have a very broad perimeter, and at the same time, we have a broad mandate. And in that mandate, we have the prudential mandate, which has to do with financial stability and solvency of each of the institutions that we supervise. But we also have a mandate on market conduct, and we have a mandate on market development, which is explicit in our law. This is also something different, because not many supervisors do have an explicit mandate in terms of financial development. Of course, this is a shared mandate. It's not just us, and it would be impossible to be the only responsibles for financial development, and indeed we do coordinate with other institutions in order to contribute to financial development from our role. And of course, the Ministry of Finance has a very important role in that end. They are the ones that have to send laws to Congress in order to promote financial development between other, of course, specific goals that they pursue. And in terms of our contribution in that context, it's explicit also in our law that we can recommend changes in law, and we have done that. In terms of financial development, when we see what would that mean, we have given certain guidelines in terms of what are the type of things that we are considering. And when we present this slide many times, making explicit our 3 mandates, we include the market development mandate, saying that this is facilitating, this implies facilitating innovation somehow. So it's linked to innovation, to changes in the financial sector in order to comply better the role of the financial sector for the whole population. So when we think about it, this has to do a lot with financial education and financial inclusion, but it's not exclusively on financial inclusion and financial education. And the other way of thinking about it is that when we regulate and when we supervise, we always have these 3 mandates somehow guiding our decisions. So when we are issuing a regulation that has to do with our prudential mandate, of course, we take into account what's the impact on financial development. The same with market conduct. So most of our regulation and supervisory actions have to do with our prudential and market conduct mandates. Indeed, our structure is like an internal Twin Peaks. Most of you might already know this, but internally we do have a prudential regulation division, conduct regulation division, and in the terms of supervising, we also have a supervisor division in terms of conduct and in terms of the prudential mandate. So all of those different units inside the CMF do take into account in their decisions and their recommendations the market development mandate as well. And of course, as board, when they come to us, we balance somehow these 3 mandates in our decision making. However, we do not have an explicit unit that takes this mandate by itself. And that is something that we are changing. And we are making it more explicit, that what do we understand by our market development mandate. So if you go to the next slide there. So the first thing that we're asking ourselves, and this is part of our just strategic plan for the next 4 years. So that's where really thinking about it deeply inside the CMF. How do we take better care of this mandate explicitly? And in that end, one of the first questions that we're asking ourselves is, how do we define financial development? And if you look at the literature, we would find different definitions, and some of them are more comprehensive, some of them are less comprehensive. And when we look at the definitions, we found this one from the IMF. It's not definition properly, but it somehow gives us some guide. It says that the financial sector development occurs when financial instruments, market, and intermediaries ease the effects of information enforcement and transaction cost, and therefore do a correspondingly better job of providing the key functions of the financial sector in the economy. So that makes us think, well, the goal here is to the financial sector to comply with the role better. And then the same paper says that developed financial markets, when they function properly, they allow for transfer of resources from savers to investors and contribute to making the economy more robust to shocks by allocating risk appropriately. There is also some evidence that financial market development brings real benefits to the poorest members of society and reduces income inequality. So when we talk about financial development, we're talking also about financial inclusion to get a better job of the financial sector in general to satisfy the needs of everyone. And in this context, what are the type of things that we're dragging out from what we have been thinking? And this is pretty much a work in progress, I should say. So that's what I'm sharing to you, what's the way in which we're dealing with it at the moment. So in this context, a financial development mandate might include activities such as education and financial inclusion. And that's something that we have been working on. I will tell you a bit about it next during our discussion. Promote efficiency, competition, and innovation, while at the same time preserve, and this is very important, we cannot have financial development if we do not have financial stability or if we do not have consumer protection. So we have to balance this in order to have financial, it's not, there's some trade-offs, it's true, but most of the time we have to think that these three mandates work together. We cannot have financial stability if we do not have financial development. We cannot have consumer protection if we don't have financial development, and so on and so forth. So really, when we are balancing these mandates, it's true that there are some trade-offs sometimes, but when you think in the long run, at the end, we're all working in the same direction. So the other question that we're asking ourselves, well, how do we measure this? Because now that we can think of a definition, this is not our definition, this is some of the literature that we have reviewed in order to guide ourselves, and we'll come up with a policy paper that will have our definition of financial development. We're working on it. But at the same time, we're working, well, once we define it, and once we have a work plan towards that, how we're going to measure it, if we're complying or not with our goals. And what we found, if you go to the next slide, again in the IMF website, you can find a financial development index. I would say it's not fully updated to nowadays. Indeed, when they measure access in terms of financial institutions, the way in which they measure it is the number of branches of financial institutions. So maybe it's not the best way to measure access right nowadays, right? But still, it's the only thing that you can find that compares countries. At least it's the only one that we have found. So if you have another one, just let us know, we will look at it. But this is a very long dated, it's a very long time series of measuring financial development worldwide. And when we found this index, and you see there the map of different countries and how they look in this index is divided in financial institutions and financial markets. And on those two pillars of the index, it has three different topics. One is access, depth, and efficiency. So those are the three groups of indexes that this whole index has behind it. And when we see the case of Chile and look at our trajectory over time since the 80s, we see that we're the red line there, if you cannot see, but we are the red line. So every country, or not every country, but on average, the world has been increasing in terms of financial development, and our country, Chile, in this measure has also increased in terms of financial development. And how do we look relative to other countries? We are above emerging markets, and we are below advanced economies. So, but this is a broad picture. If you see the sub-indices in terms of access or depth, there are changes, and in some aspects we are better, and in some aspects we are a little bit worse. But so this is a kind of things that we can look at, and we see there that we can do better, at least in this measure. And we need to know more about how we are, which our gaps are. So this is the other thing that we think it's very important to have some way of measuring financial development, to monitor how are we doing and how can we do better. The next slide. In terms of then of these three aspects that I mentioned in terms of access, depth, and efficiency, the type of things that are behind the index and the type of things that we are looking at as well. In terms of access, when we talk about access, we're talking about the coverage of financial services such as credit, insurance, savings, payment methods. And these are the type of indicators that we follow very closely. We just published, like 3 weeks ago, our gender report that has this type of data. So we can see how, indeed, gender gaps have been closing over time and access has been increased to all these different financial services. So that's something that we usually do measure. And it's a good indicator to see how we're doing in terms of financial development. But it's not only access to financial institution or financial services, but it's also market financing for small and medium-sized companies. That is also something very important, and different sources of financing and access to those different sources of financing. So that's the other thing that it's included in terms of access, and that we have to work towards having better access to different type of companies. In terms of depth, what are the type of things that are behind this indicator? To have competitive prices, enough liquidity, higher number of participants, more and better financial products and service supply. So there are a lot of different things that we need to address and follow and see how we're doing. In the case of Chile in particular, we look pretty well in terms of depth. When you see depth in as the number of participants and the size of those participants, because we do have pension funds, insurance companies, mutual funds that have grown over time and that participate in the market. But when you see liquidity, we do not look that well, of course. And there's a lot to do on that front. In terms of efficiency, low cost in terms of fees, spreads, stock market turnover to have a good valuation of our different financial instruments, clear rules and regulation. That's something that we understand that it's needed for the market to be efficient, and proportionality on those regulations. So that is something also that we know that it's behind efficiency. We know that as a regulator, we have to play a role to facilitate innovation and to lower the burden of regulation. But there's also always going to be a burden. And I have to say that because the regulation does have a cost. It's not costless. It would never be costless. But that cost is associated with a benefit. And we have to look into this equation in order to have more benefit than cost somehow. But it's going to be the case. So when we look at these different aspects of financial development, we'll find a way of how to measure and assess what are our gaps, what we can do in order to have a better financial sector. But we always have to have in mind that when we think about financial development, this needs to go hand in hand with financial education. So financial education, it's critical and it's behind financial development. It's not possible to have financial development we do not have proper financial education. And this is a huge challenge. We know that this is very difficult because we do have important gaps there, but at the same time it's quite complicated to close those gaps. But we know that this is necessary. People and customers need to know their options, the characteristics of the available financial products, and the consequences of their actions. Otherwise, we would not have a sustainable financial market development. And the other thing that's important, it's behind these three aspects that I have just commented, is financial innovation. So, of course, we can do things as we have been doing them, or we can move forward with the same type of services that we do have until now. But innovation, it's necessary to do things better. And indeed, when, as regulators, we acknowledge that if we do not understand and we do not take on board innovation is going to happen anyways, but it's going to happen outside of our perimeter. So that is something that we have to look very, very carefully in order to make progress in terms of financial development, considering our role. So I will stop there in order to give space for our discussion.
Thank you very much, Solange. Very, very interesting presentation. I would like to ask Axel. He has extensive experience internationally, so he can give us sort of a perspective on how are you seeing a potential benchmark, or how are you seeing the development in our region, and what could be a market that we can look up to?
Sure. Well, first of all, thank you very much for the invitation. Thank you, Solange, for sharing your ideas with us today. I have to say, at first, it's not easy to really identify this third mandate of market development as a regulator. Actually, I did a very small, with no statistical meaning whatsoever among different people, and many of you didn't even know that the CMF had a development mandate. It's quite clear about the supervision, about the conduct part, but the market development. And I think that could only be natural in a way. It seems that we look at regulators as someone who supervises, who makes us behave well. In my mind, at least, the first image is someone with a stick in the hand. So it's sometimes somewhat difficult to also see that they might have a carrot sometimes in terms of the development markets. So I want to start by saying this is not an easy task. It is challenging. Solange talked about innovation. Innovation, by concept, involves taking some risks, and supervisors are not the best at taking risks. They actually try to avoid them. So understanding that this is not something easy, at the same time, I do think it's fundamental for markets to develop to cater to some of the objectives that Solange mentioned: inclusion, access, more competitive markets. But there are challenges that I think internationally there are some good examples, but also bad examples that we should be wary of. So one important aspect is that this is done jointly between the private sector and the public entities. Innovation itself is something I think that private sector players feel more comfortable with, but supervisors or regulators should also help in terms of determining guidelines, as you mentioned, setting perimeters, because if innovation it will happen anyway, and if it goes unsupervised, eventually it could come at a very high cost. Perhaps the challenge is how to balance the private and public involvement in this. Perhaps have the private sector do the kind of early innovation, and then kind of have the supervisor kind of define the perimeters where we want to go. We see some examples of that in places where, for instance, some years ago, in development of new products, like in Colombia with an exchange-traded fund, that was something that the market really wanted. they could only get to certain place in terms of developing, and you have to go through the regulator to kind of see what obstacles you might be facing. So there were some changes that were required for a new product to be developed in the market that at a certain point involved the regulator. It did not start by the regulator necessarily, but at a certain point there was a joint involvement. Now, on the other hand, sometimes regulators can be a serious obstacle for market development. In other markets, the fact that there's been, I would say, not necessarily regulations against market development, but that are not early enough to acknowledge some changes in the markets. So in the region, we have several examples of how one of the things that you mentioned, Solange, is the depth of markets, liquidity. We've had some of our neighboring countries facing serious liquidity issues. Chile has not been the only country that has been affected by pension fund savings retirement, and that has had a profound impact on local capital markets. To the extent that some supervisors have not acknowledged that and perhaps adjusted the regulation, this has had a serious cost in terms of the liquidity. And as a global investors, liquidity is very high in terms of how we measure markets. So if we're looking at metrics from an international perspective, liquidity and depth of markets is going to be very important. So I'm just going to stop here, but just kind of summarizing, there are good examples to follow, understanding this is a joint effort between the private sector, where, probably we should expect the regulators, rather than to lead, to perhaps kind of set the perimeter. Sometimes they do have very good, I guess, actions in terms of nudging. Nudging is like a small push to get things done when the market by itself is not able to take that step. Let me stop there, Jaime, and see what
Thank you, Axel.
has to say.
Carlos, you set up a very successful, specialized, sort of smaller asset management. I think your company is, what, 6 years old?
7 years old now.
7 years old. So from your perspective, how could this development market can be sort of productive in the interaction between the private sector, the public sector, from your perspective as a specialized, sort of smaller asset manager?
So, first of all, thank you for the invitation. And I'm going to start by saying that probably my remarks come from my experience as an asset manager, so that's a very small portion of what the CMF covers, right? But from our perspective, we believe there are certain areas of improvement, like someone put it yesterday, so I'm not criticizing in any way. And when I discussed this with my colleagues, one of the topics that came up mostly was, how long does it take to have an interaction with the CMF? So whenever we want to innovate in something, for example, something that a specific example I can think about is, we wanted, in order to, we had an idea, right, for a new fund, and for that we needed an interpretation of a piece of the regulation. So we submitted a question, and it took a year for us to get an answer. So, but by that time, that idea was no longer relevant. It was all gone, right? So and there are many examples like that when you need an answer, and it takes so long that the innovation is no longer there. And thinking about what can be, and this makes a lot of sense with the description Solange made of who's in charge of what inside the CMF, and listening that, hearing that there's no one with a specific mandate of market development makes a lot of sense, and it explains a lot, because we've always had this sense that the people that we're dealing with in these interactions is people that have 10,000 other things to deal with, and this is not their top priority at all. So if that's going to change, that's probably going to be for the better. And another thing that I believe it would help a lot if there was a more close and constant interaction between the CMF and market participants. Because from what I've heard, there have been very positive instances in which market participants have discussed with the CMF what is hurting for us. So what changes do we need? And those interactions have been very positive, but it's hard to tell whether there has been any follow-up on those discussions. And so if it was like a quarterly or twice a year interaction with someone inside the CMF whose whole mandate was to follow up on those discussions and see where they're going, I think that would be a very, very positive change.
Thank you, Carlos. Coming back to you, Solange, what are the actions that the CMF has already taken and is also working on to comply with this legal mandate in a way?
Yeah, well, there's a lot of things that we have been doing during this 4 years, I should say. It's not that this mandate didn't exist since the starting of the CMF and in 2019. But it's true that it was not explicit or not worked from that perspective at least. So indeed, when we think about the fintech law, that an explicit way in which the CMF has promoted financial innovation and financial development. There was a white paper that was published, and that was a starting point for the drafting of the fintech law. And in terms of access, the fintech law is going to be very important. And we talked yesterday about open finance, and I do think that it does have a role. Financial education, we published last year our financial education policy. So we already do have a roadmap there and actions taken in order to contribute to financial education from our end. And you can visit and look at our financial education policy there. And during the financial education month, that's October, so next month, we are going to launch a new debt report for bank clients so that they could access to their report. We have more than almost 5 million downloads of the debt report. So people is using that and getting to our website in order to get their debt report very, very frequently. But the way in which they access this is just because other financial institution or someone is asking them for the report. And the format in which that report is, I don't know if people understand it. Well, I do. I do know that they do not understand it. Because that was the first thing that we did. No? We did focus group and we put people trying to read that, and it was impossible. So now we are making it a lot more user-friendly, and then we are enhancing that report very significantly, and also linking that with financial education tools that we do have in our website, or the mortgage credit simulator that we do have in our website, for instance. So trying to help people to better understand their debt situation and how to take action. So that is something that we are going to launch this October. So those are specific things that help access and in better conditions, because people is more educated and know better how to use financial services. We are pushing a lot for the consolidated debt register, which is a law that it's in Congress, again, towards having better access for people to credit in that case, because good payment behavior can give you better access to credit in better conditions. So all of those things are being done by CMF. In terms of depth, also the fintech law has important things that are being taken care of in terms of the depth of the market. The market agents law It's also important, we have been doing a lot there as well, the whistleblower role, because when we talk about depth, we need a market that be transparent. So that is a very important and key feature for the market to be liquid enough and good valuation of the instruments that are traded there. We also have the financial resilience law that is also being discussed in Congress, with the repo market being part of that law in order to, again, have a better liquidity in the market. In terms of efficiency, we are also doing a lot of things. Again, the fintech law helps. The consolidated debt bill is also helping for efficiency in order to allocate credit according to risk. It's not just for users, but it's also for the financial institutions to better allocate resources. Again, the financial resilience project have several issues that are taken care of. We hope that the risk-based capital insurance companies law would also come into Congress, and we do think that this is also something that helps for financial development. Risk capital means, again, a more efficient capital management for the companies and for us to regulate the industry. So we hope that could move forward. It's a more flexible regime. I was hearing yesterday about the pension discussion in terms of all these limits. Well, again, if you have a regulation that is looking at complying with limits instead of assessing risk and having capital associated with that risk level, well, we're in better shape if we go towards risk than instead going through a bunch of different kind of limits that maybe not allocating risk in the best way. So there are a lot of things that we are doing, and I want to be very explicit about that. It's not that we did have this mandate and that was in a drawer somehow closed and was no one taking care of it. No, we were taking care. We do have proposed different initiatives, legal initiatives. We're doing a lot of things in terms of moving towards better financial development, but we know that it's not enough. And the first thing that we're planning to do is to have a good assessment of how we are at this moment in terms of financial development. I just showed an indicator from the IMF that has a bunch of indicators, but we need to really understand our own market. Maybe some of it we will be able to take from there in order to be able to compare ourselves, because the type of indicators that we might build, we might not have an international comparison, but at least it's a starting point. And some of the indicators will have to be tailor-made for our own market, and we do need to do that to have a general view of where we are, and then to identify which are our gaps, what we should be working with, what are the trends, what are the best practices, what is the international experience, what are the initiatives that are being driven by the private sector, and having that assessment of where we are, we can draw a work plan for the future. And this, we're not going to do it alone, of course. We need the private sector. We need to understand what the private sector is thinking of in order to take better care of what is really needed. We will also publish, we do have now a financial education policy for the CMF. We're also going to publish a financial inclusion policy for the CMF. Financial education, it's necessary but not sufficient for financial inclusion. So we're going to also have a financial inclusion policy that would guide our role on that respect. And in terms of the interaction with the private sector, we do have this Center for Financial Innovation. I would not want to raise expectations because it's just 3 people and they will be very, very busy with the implementation of the fintech law. But in the medium and long run, they are going to be the face for the financial sector in general and the channel in which the different initiatives from the private sector should go to, and they will have the specific mandate to take care of those innovations and follow up on the requests that have to do with financial development. So, but they will not be alone. We also giving this role to the Research and Statistics Division in the CMF, which is a larger group. But nowadays they don't have explicitly this role, and they will have it. So this is the Financial Innovation Center, and also the Research and Studies Division that would have an explicit mandate for financial development. And also in terms of the workshops and the way in which we interact, we shared this with some of you in a meeting in Chile a couple of months ago, but we are going to be more proactive in terms of having this type of meetings. It's not just getting you in lobby meetings. Most of you ask for a lobby and we receive you. But now we are going to ask you more to come to us instead of you asking us to receive you. And that we're thinking about doing twice a year, a broad meeting in order to see where we are, what are the ideas, and what we have maybe committed to look at and get back to the private sector with more general terms. But besides those specific, more general meetings that's twice a year, we will have specific workshops, and we already had some. Insurance companies, we did have one. Banking sector, we did have another one. But with the fintechs, we have had some of them as well. So we are going to have some specific workshops that are more streamlined in terms of specific sectors or issues that need to be addressed. But that's in parallel with these two more general meetings. So this is the kind of things that we are thinking of how to address this for the future, the things that we have been doing and the things that we are planning to do.
Thank you, Solange. One of the things that you mentioned under the efficiency pillar was the proportionality in regulation. And for some of us, when the Superintendency of Banks merged with the SBS, our worry was if the sort of this huge role of making sure that the financial system is sound and solvent would actually suck all of the energy from the regulator and leave sort of the valores or the exchanges and securities side a little bit as the poor brother of the Superintendency of Banks. And in the proportionality of regulation, are you thinking about sort of having a special panel of smaller financial institutions that have a different regulation?
Yeah, as I mentioned at the beginning, we do have a very broad mandate and a very broad perimeter in terms of the type of institutions that we supervise. Indeed, as we have different types of institutions are under regulation and supervision, we participate also with in different international forums with the different associations of supervisors of whatever you can think of. And of course, we are part of the ASPA for banks in the region, or we go to the BIS meetings in Switzerland. And we also go to the IIS for the insurance, and ASAL in the case of the region, or IOSCO in the case of securities. And one of the things that that we did at the CMF is to see, well, how are we going to keep track of what's the best practices and what's going on in terms of standards around all these different institutions, because they do have different standard setter bodies that are working on this type of things. And as board, we split somehow our responsibilities, and there's one specific board member that goes to the banking sector standard bodies and associations, and there is one that goes to insurance. And I'm saying this because I am the one that goes to IOSCO, to securities, indeed. So, so we are not taking lightly the security side, and we were not very active in YOSCO. We are members. We are MOU signatures, so we signed the MOU, but we were not very active since we merged, indeed. So we are taking that seriously.
Good.
And when we go to the YOSCO meetings, one of the most important things that's being discussed all the time is proportionality. They have like say there that same risk, same regulation. And that is kind of mantra when you go to YOSCO, especially YOSCO. The others is the same, but YOSCO is the one that says that the most. So when we think about the same activity, same risk, same regulation, that is easy to say, not easy to do. Because when you think about proportionality, of course you have to think about your risk appetite, because you need to somehow be more flexible, and more flexibility means more responsibility on the entity, but at the same time is somehow maybe a weaker entity because they are smaller, they don't have the resources. So you are putting less regulation on an institution that might be less prepared to assume the risks. So it's tricky. Because smaller institutions might not have the capacity to have all the layers that are needed in order to control risk. But if you ask them to do that, maybe it's too costly. The regulation has such a high cost that makes them not viable. So how do you get a viable institution in order to have financial development, financial innovation, but at the same time be prudent? And that's tricky. And we know you have to do that. Indeed, we have just published for consultation. Some of you might have sent us comments on that public consultation of the regulation on operational risk and risk management for financial intermediaries. And we know that one of the issues that has been raised is proportionality, for instance. So we need to calibrate that in the best way possible. So we are working on it. It's not easy. We are pretty much aware that there are trade-offs in terms of how much flexible we are, how much proportional we are in terms of our requirements, but we need to be prudent, because otherwise this can be really tricky, because we can be very flexible, but then if risk materialize, we will be in big trouble. Not just the private sector, but ourselves.
Not an easy trade-off. Thank you very much, Solange, Axel, and Carlos. A great presentation. I think now we all know that this is a challenge that our regulator has, and that we have as a private sector a role in cooperating with the regulator in advancing the goals of having a more developed and deep capital market. So please give an applause to Solange. And we'll continue our agenda here at the same room, the Assembly Hall, and we will have Minister Diego Pardo that will address the audience on green issues, and we'll have a panel on green hydrogen. So please help me welcoming Minister Pardo. I don't know who's gonna host this panel. So Mr. Alfredo Ergas. Thank you.